Okay, this is Timing Strategies client blog update for Monday, October the 20th. This is for communication purposes only. This is not a recommendation to buy or sell or take any investment whatsoever. If you're not a client, please feel free to give us a call or an email with any questions. But again, this is not a recommendation to buy or sell anything. Also, take a look at our website, timingstrategies.com. There's a lot of good information and resources there on other parts of it. Take a look at our IRA and 401k management page. That'll give you a lot of good information too, and we encourage anybody to feel free to give us a call. Okay, so I posted on Saturday for Friday's close. YouTube didn't seem to be able to get that on in video, so we're just basically updating where I put out on Saturday from Friday's close with just one more day of information. Let's get down to brass tacks. There's too many bulls all of a sudden. Even the bears and some very, very well-respected technicians by my standard that have been bears quite a bit of the way down are now turning bullish, and I respect them greatly. And myself, I've been bearish, like I said. I started to get a little bullish, actually a little too soon. I am not bullish anymore whatsoever from a long-term perspective. From a short-term perspective, all we have left in this market, in my opinion, is a bounce of significant magnitude that could take this market up to the second selling point that I'm looking at right now, where, again, would give us about, this is terrible, on a percentage basis, we would see, with any luck and all the stimulus, about another 10% hop or pop higher from where we are at the close on the spiders of the S&P today. That'd get us to about 1100, maybe with a little ambition 1120, 1130, but starting at about 1085, so right around this level, again around 1085, I'm actually going to start looking to start getting out of my longs. I scaled in 30% here back the day before on the 17th. We got long 30%. Regrettably, I didn't realize what was being pulled by Hank Paulson and all his cronies along at the Fed and the Treasury Department, what was really going on at the time with the bailout and the whole cabal. Long story short, I added a little more in at this point. We went long to about 60%. Then on the breakdown on Monday, the October the 6th, we got long 90%. And then on Thursday, October the 9th, I believe it was, Thursday, we got long 120%. We took 30% of that 120% long off on Monday, it was Columbus Day, whatever day that was, the 13th or something like that. So we're only long 90%. And I'm looking to get short or flat if we can get one of two things. A retest back up to this level of the last high that we saw right at about 1035, 1040. I might start going flat, basically again right at that 101 level or the 10,000, the 1,000 level on the spiders. I may or may not, based on price action. It's going to have a tough time negotiating that line again. I wish I would have taken more off. Obviously, I don't have a crystal ball. These are unprecedented times. But if we get some luck and we can, in price action and some volume and other filters I use, give us the kind of indication to hold on, I anticipate that we could see, with any kind of luck, or at least a little more than a little luck, a move back up to about 1100, which would give us about another 12 to 13% upside from the close of today, right up here where we got the second red line and the double yellow sell arrows. At that point, if we can get there, I will absolutely go 100% flat, especially if we can get there in the next 3 to 5 days, or next 1 to 5 days. And that's the kind of move I'm looking for. A violent surge up that everybody wants to get into. Start chasing, feeling like they're waiting for confirmation. Oh, whoops, confirmation is now 10% higher than where I was back here. Back in the pool. At that point, I'll start getting flat, potentially short. We do have another level that I would strongly love to get short at again, and that's at about the 1200 level on the spiders or the S&P cash. I doubt we'll ever see that for a long time. We may see it, but again, This is a day-to-day operation we're working with here. So what I do believe, though, is that the next market, again, and this is everybody else also, so I don't want to sound like I'm too much original material here. I believe that the energy markets actually do pose much more significant longer-term upside, and certainly on a percentage basis much more than what the S&P will give us. So what I have long is a 10% position in the energy, Ridex Energy and Energy Services as of that day right there. My what is that? The data window. What is the data window? It's not up there. So, where the heck I put it, I don't know. Anyway, so we got a 10% long in the Ridex Energy and Energy Services, and we also have in the GDX a position on as a 10% there. I was looking for a little deeper sell-off on the GDX, a wipeout of today's lows, and then a move, something similar to what we see today. I did not add. I was looking to bring that up from 10% long Ridex Precious Metals, and also using the XLE from 10% to 15%, and also 10% to 15% in the energy sector, for a total of exposure of 30% energy and precious metals. Didn't want to chase it today. Nobody ever does, but I can wait. I very much may wait until we get a pullback. Who knows what tomorrow will bring. If we get a violation of this low and we can hold the low that we put in as of Wednesday or Thursday of last week, as long as we can hold that low, I'll again add in from a 10% long position in the energy and energy services to 15% that with the metals, combined for a 30% position. What I want to also bring to attention here is the USO. I actually trade crude with the actual futures, but the USO works pretty good. I'm getting long. I'm getting very bullish of crude right around here. The USO for our Schwab clients, our Schwab Institutional Management Program, is something we started moving into today using the USO on the ETF. I would like to see that get wiped out one more time, hit out those lows, and then I'll be much more in favor and aggressive of getting longer more aggressively the USO. On the bond side, I'm very bearish on bonds, using the TLT as a proxy. We've got the Ridex Inverse Government Bond Fund looking for a little bit of a pop back up to the upside to maybe put on a 10 to 15% short position in Ridex government bonds. With our Schwab accounts, what we're using is the TBT. And that so far is working out. It's a 2 beta negative inverse ETF against the U.S. government bonds. Long story short, why that's happening: the government's backing commercial paper and not backing their own stuff. So I'm considering short aggressively bonds and long energies, and also long the oil. And beyond that, we'll see what happens tomorrow. Feel free to give us a call with any questions. And again, keep an eye on our website. I'll just post this up, and probably if we see any price action changes for the accounts, we'll do our best to update it. But sometimes it takes a day or two to get them up to date because I'm very busy. All right, have a good night. Happy Halloween to everybody.